Interesting. We want to talk a little bit about exactly how all of this is affecting the markets, how you need to invest in light of the weather and jobs. Joining us right now is Mark Pato, U.S. market strategist at Cantor Fitzgerald, also Keith Springer, president of Springer Financial Advisors. We also have with us, it's a big panel today, Steve Grasso, director of institutional sales at Stuart Frankel and a CNBC market analyst. Keith, I mean, everybody's saying it really doesn't have that big of an effect on things. You just heard Steve Leisman say even Katrina didn't really matter at the end of the day. But I know you're concerned right now about the equities market. How much is weather playing into your concerns?
Well, it is largely temporary. We've got to remember that we always adjust. We adjust for inflation, you know, taking out food and energy. Let's face it, people can't buy things today. They can't go drive cars to test drive cars if you can't be on the roads. You can't get to the malls to try on new clothes. So it's definitely going to have an impact. But you've got to remember, it is going to be temporary. If the storm continues, that's where I would see a larger problem. But as you know, we've said, it's always factored in. You know there's going to be snow days. You know there's going to be tough. You know it's going to be a little bit of an impact. Not a whole lot on GDP. But if the storm got a lot worse, that's where I would really be concerned. But I think we're going to be expecting it from the retailers. When the retail sales come out, we're going to say with an asterisk, you know, we knew there was a storm. That's why sales were a little bit low.
Would you short them right now because of that?
Well, very temporarily. And if the storm got worse, you could short them. But I don't think there's enough of a pop in them to short them. You've got to be very careful because if the storm subsides, we get good weather. Let's face it, the weather tends to moderate. If we have a really bad January, we might have a really good February, which may make it even better.
Yeah.
So you've got to be very careful. If you short them, it could whipsaw you back and forth.
You know what?
Can we just pick up on that inflation question, which is, I don't know how you play, when you talk about how to play some of the economic data, how do you play the higher commodity prices? I just wonder at the end of the day if that's a deflationary play, one that takes away from output and causes you to reduce your earnings outlook rather than play the inflation as in all prices are going up.
Well, you know what? Let's squeeze in a quick break because I know Mark is looking for a pullback, and I want to hear about that on the other side of the break. All of you, stay with us. We're going to talk more markets on the other side.